The Debt Demolisher TV with Sophia Melonē.
Hi everyone, it's Sophia Melonē, the Debt Demolisher, here to bring you the tools, tips, and tricks to help you manage your financial baggage the right way. I'm super excited to be before you guys for yet another episode on the Debt Demolisher TV because we're going to continue our conversation around taxes 101. In this part 2 video, I want to discuss and go further into detail about failure to file penalties, what that consists of, and how it's actually calculated when you do not file your tax returns for the IRS by the intended due date. So the penalty that you have to pay for failing to file your tax returns on time is a percentage of the taxes that you did not pay on time. So one of the things that I mentioned in prior videos is that it's not necessarily when you file an extension that you get an extension to pay. It's really just an extension to file. So a lot of times people think because they filed an extension that they should not be penalized for any taxes that they may owe as a result of filing and submitting their returns even at that 6-month extension mark, which is typically in October of the year. So how to know that you owe a penalty? The IRS will actually send you a letter or a notice to let you know if you actually owe a failure to file penalty. There's a lot more information around the different notices, so I'm not going to go too far into that, but let's talk about how it's calculated. The IRS calculates the failure to file penalty based on how late you file your tax return and the amount of any unpaid tax as of the original payment due date, which is the April the 15th or April the 18th deadline, depending on if the 15th falls on Emancipation Day for the District of Columbia. And if that happens, then of course the due date for taxes gets moved to the next business day. So any unpaid tax is essentially the total tax that is required, and it's shown on your tax return minus any amounts that you paid through withholding, through estimated tax payments, and or through allowable refundable credits. I'm going to talk about refundable credits just to give you guys an understanding of the differences between the two, because some credits are refundable and some are not. So the IRS calculates the failure to file penalty in the following way. So they take 5% of the unpaid taxes for each month or part of a month that a return is late, but the penalty will not exceed 25%. So the maximum penalty that you can receive for failing to file your tax returns on time is 25% of your unpaid taxes. That's the max. And again, they are assessing this 5% penalty each month until it gets to 25% of whatever the unpaid tax is. So if a failure to file and a failure to pay penalty are both applied in the same month, the failure to file penalty is reduced by the amount that the failure to pay penalty for that month is. So it won't combine, so it won't exceed 5% per month. So you can get hit with a failure to file penalty as well as a failure to pay penalty. 2 penalties on top of one another, but it still will not exceed 5% for each month or part of the month that your return was late. I want you to understand that interest is assessed on penalties. So they do charge interest on the penalties. And this is how a lot of times folks' tax bills get so high, because the interest is accruing on any unpaid penalties as well as any unpaid taxes. So in order for you to minimize this risk is to pay the penalty. So you can pay the penalty so that way you can stop future penalties as well as interest from adding up. Make a decision to send in a payment or pay your taxes in full. That way it will allow the penalty to be reduced or not be incurred at all. You do have an option to request to see if a penalty can be removed or reduced. You have to be able to prove reasonable cause though. And a lot of folks aren't able to meet this reasonable cause scenario for them to be able to really explain and justify why they weren't able to meet their tax obligations. So by law, the IRS cannot remove or reduce interest unless the penalty has first been removed or reduced. So take that into consideration. Disputing a penalty is also something that you could potentially do. If you disagree with the amount that you owe, you could dispute the penalty. You'll have to call the IRS. Normally, this information will be on the notice that you receive, letting you know that you've been assessed with the penalty. And you could actually send in a letter and state why you are requesting or want to have reconsideration of the penalty so that it can be removed or reduced. And also you want to submit your supporting documentation to that. You have to, for each penalty type, you have to explain why you think the IRS needs to remove it. If you want to avoid a penalty, like I've said before, you can do this by filing on time and paying your taxes by the due date. Again, the penalty is triggered by the amount owed. So regardless, pay your taxes and pay your taxes on time. If you can't do so, you can apply for that extension of time to file and also remit a payment plan at the same time to help with avoiding those penalties. So you can apply for an extension of time to file. It doesn't cost you anything to do that. You're automatically granted an extension of time to file, but this does not give you an extension of time to pay. So a payment plan can be put in place and it can help you so that you can pay over time to reduce that amount of penalty that may be incurred by the time you actually file your returns. You could also apply for a payment plan, as I mentioned, if you can't pay your full amount of taxes in full, and this could really help you with applying for it ahead of time instead of waiting. So pay what you can now and then apply for a payment plan, and you may be able to you may even be able to reduce future penalties when you do that.
The Debt Demolisher TV with Sophia Melone.